Welcome to This Note. Think of our time together today as a professional mentorship session. I'm here as your guide to help you learn, build, and truly thrive in the modern digital economy. So whether you're a startup founder, a freelancer looking for an edge, or just a highly focused learner preparing for the future, you are absolutely in the right place.
I want to kick things off with a pretty massive question. What happens when wealth itself becomes programmable? Seriously, take a second to really think about that. We are standing right at the edge of a fundamental shift in how value is created, stored, and transferred. In understanding this, it isn't just some academic exercise. It literally unlocks immense business potential, completely new career opportunities, and powerful new ways to build wealth. Okay, let's dive into this.
Here is our roadmap for today. We'll cover the digital wealth revolution, define digital assets, sort out the crypto world, explore real-world business applications, and finally, learn exactly how to monetize this digital knowledge.
All right, Section 1, defining digital assets and building your foundation.
Now, you might just think of digital assets as, computer files or basic crypto tokens, but the reality is so much broader, yet surprisingly precise. As the experts at Wells Fargo point out, digital assets are actual items of value that can be securely owned, collected, traded, or invested in over the internet. We're talking about digitized items of value, everything from photos and loans to money itself, all transformed into programmable representations of rights and ownership.
Think about traditional assets for a second. A physical oil painting, a paper will, or maybe a deed to a property. Now, contrast that with digital assets. What's truly revolutionary here is that those physical things are moving online. Digital assets can act as digitized claims on those exact same physical items. It's essentially taking the old, slow world of physical ownership and upgrading it to be instant, secure, and completely borderless across the internet. It's a real game changer.
Bitcoin is probably the best-known example of this in action. We're not just talking about a digital coin here, it's an entirely new architecture. It allows a person-to-person transfer of value securely over the internet, completely bypassing the need for traditional banks or governments. It is literally decentralized trust in action.
Moving right along to Section 2, sorting the crypto world and making sense of the market.
20,000. Yeah, you heard that right. According to data provider CoinMarketCap, there are over 20,000 digital assets out there right now. To put that into perspective, that's more tokens than there are publicly traded companies in the US. For an investor or developer, this naturally creates a massive wall of confusion. How do you possibly choose?
Which leads us to a highly critical question. Are there really so many tokens required just to facilitate payments? If you're feeling a bit overwhelmed by the sheer volume of options, your instincts are spot on. The short answer is no, they aren't all for payments. So how do we make sense of all this?
Well, the solution, as outlined by the Market Vector Classification Framework, is rigorous categorization. To bring some order to the chaos, professionals look at the actual usage and the underlying microeconomics of these various networks. Grouping tokens into specific sectors makes this incredibly massive digital space digestible. And that's absolutely crucial, whether you're part of traditional finance making your very first move, or you're running a crypto-native fund.
When we compare Bitcoin and Ethereum directly, we see exactly why this categorization is so key. The main takeaway here is that these tokens are fundamentally software. They perform entirely different functions. One is optimized for secure value storage and transfer, while the other is specifically built to run decentralized applications and smart contracts. And because they're software, their functions and use cases actually evolve over time. That is exactly why evaluating the actual trading activity and network usage is so vital.
All right, Section 3, real-world business applications. Let's take this from theory to practice. Let's look at how traditional finance is modernizing as we speak. According to Fireblocks, we're seeing the massive rise of tokenized real-world assets. We're talking about traditional instruments like stocks, bonds, bank deposits, commodities, and even real estate being issued and traded in digital form. Why? Because it offers far greater efficiency and accessibility. You bypass all those traditional bottlenecks when the asset itself is a programmable piece of code. This is a massive, massive area for automation and digital transformation. Then we have another incredibly powerful category, non-fungible tokens, or NFTs. And if you look past the sensational headlines of digital art and collectibles, NFTs represent something truly foundational, unique digital ownership. This is revolutionary for intellectual property. If you're a content creator, a freelancer, or an entrepreneur, NFTs provide a framework to uniquely own, license, and monetize your digital creations securely. It's opening up entirely new business models.
So let's break down the simple workflow of how this tokenization actually happens. Step 1. You identify a physical or traditional asset. Step 2. You create a digitized, programmable claim on that asset. Step 3. You can now exchange it securely over the internet. That's it. This simple 3-step process is exactly how forward-thinking enterprises and startups are actively modernizing their legacy systems today.
Which brings us to Section 4. Monetize your digital knowledge and secure your future in the digital economy.
The market vector playbook is fantastic here. By understanding how to categorize and analyze digital assets, you gain a massive competitive edge. You can identify market cycles faster, you can quickly assess which sectors are outperforming, you can exploit narrative marketplace, which just means you understand the stories and use cases driving the market, and ultimately you enhance your portfolio's alpha potential. Whether you're building a side hustle in data analysis, consulting for businesses, or investing your own capital, this structured knowledge translates directly to digital income.
As we start to wrap up, I really want you to burn this concept into your mind. Digital assets are programmable representations of human collaboration. Mastering this isn't just about catching a tech trend. It's about preparing for a future where AI agents, smart tools, and programmable money execute complex business agreements entirely automatically. You are literally learning the language of the future economy.
Actually, there's this quote from our source material that I absolutely love because it perfectly summarizes the stakes here. They form the foundation of the emerging digital civilization, in which information, capital, commerce, governance, creativity, and human collaboration increasingly exist in digital form. Seeing it from this broader perspective transforms everything we've discussed today into a complete, actionable framework for 21st century wealth, ownership, and value creation.
Which leaves us with one final, deeply important question to end our masterclass on today. How will you build your wealth in the emerging digital civilization? You've got the foundational knowledge now. You understand the architecture, the real-world applications, and the pathways to monetization. You are future-ready. Now it's time to take action, start building, and create your own opportunities. Thank you so much for joining me for this note.